So stocks finished the quarter and the month on a little bit of an upbeat note, at least in a couple of indexes. Not so good on some of these others. We're going to break down the difference and see whether today was significant in its bullishness, significant enough to start maybe a new trend, especially on the Nasdaq where we had ended the previous one, or at least keep a mature intermediate run that's already well beyond its normal range going for however much longer it can stay mature before it ends its rally. So we're going to kind of break down today's move and see if it was any significant or singular at all from other based on technical indicators. We'll take a look at what may be driving a lot of today's action. So we'll break that down too from an intermarket standpoint. And then our trade idea of the day takes a look at a stock that was in the news today. It had a nice little snapback rally itself, but again, was it enough to break us out of a sideways action? So we're going to talk about how to trade that heading into what's going to be an earnings season for a lot of companies here now that we're through the end of the quarter. So let's go ahead and get started. Today is Wednesday, March the 31st, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's go ahead and start off taking a look at the S&P 500 with the market forecast indicator. Nice little another bullish move higher today. A little bit of a long upper shadow that we haven't seen for a while, but nonetheless ended up higher by the end of the day, about 1/3% higher up there. The near-term line did drop because of that long upper shadow. The momentum line stayed relatively subdued. It did come out of the reversal zone, so that's your bullish intermediate confirmation signal. So we did come out of that. We still have a strong bullish posture with rising market sentiment line too. So that's dark green shading, green line, very bullish. Same thing on the Dow Jones Industrial Average. We did get some, a little bit more bearishness on the Dow than we did on the S&P, which has been rare lately. But that brought the momentum line down to an extreme low point. So that's something to bear in mind. Also brought the near-term line down below the 50th percentile, also something. But despite the weaker short-term sentiment, that looks relatively bearish, you are still well above the 30-day moving average, and you still have a strong bullish intermediate posture with rising long-term market sentiment. So it doesn't really get much better than that. The Nasdaq gave us a good day, 1.5% rally. Can't complain with that, but it also produced a bearish pattern. Light green shading in the yellow line is a bearish pattern. We did not get above the 23% retracement level. So keep that in mind. The near-term line did not really get into the reversal zone here. The momentum line is not really going up or down, but it's not following these extreme lows with bullish highs either. And so not nearly as bullish as we would like to think it is. We've seen this pattern before over here coming out of expiration in March. We'll see if it ends up looking similar to what we've seen before. So get above this 23% retracement and hold it. Great. We are right back where we need to get to. But otherwise, we are not as good as the day today was. That wasn't a bullish breakout type day in the least bit. The Russell 2000 also had a nice little day today, up over 1%. And we still haven't dropped below the 23% level. But again, you notice we're not following up the extreme lows with a bullish high on the momentum line. The near-term line is not able to get up into the upper reversal zone yet. So we're not getting strong enough short-term sentiment to offset what is still some weakness here. Now, we haven't started the pullback yet. We did get a few days of of dark pink shading and a red line, but we never did break that 23% level and kind of hold that breakdown. Both times we finished below it, even just barely. We came right back up above it the next day. So we really haven't broken down yet. That's still out there. Remember that over there did not break the 23% line because the high at the time, the high that's up here now was way over here. So we did not break the 23% level on that close, but we did on these two. We haven't started the pullback yet on the Russell, but we are below a falling moving average, and we're not getting strong enough short-term sentiment on either the Dow or the Nasdaq, or the Nasdaq or the Russell to say, okay, today was a good day, a bounce back day. No, today was just, look at all the updates we've gotten since the Nasdaq has started its pullback, right? It started its pullback over here. Look at all the updates we've gotten since then, right? If you look at it from this perspective, look at all the updates. The Nasdaq started its intermediate pullback right there on this day. That's when it officially started, because that's when we kind of broke down dark pink shading, red line, breaking the 23% level by a significant margin, right? And obviously below 3% for the first time, very, very significant. Even though we did a gap down, it wasn't a significant gap. We had bigger gaps before, but that gap turned into a much more bearish move. But look at all the up days we've had since then. Lots of days where we were up 1% or more, or 1.5%. So don't look at every day up day as, well, I guess we're not bearish anymore. Just like we don't look at every down day when we're on bullish runs as, oh, we're not bullish anymore, right? It's, you get lots during intermediate pullbacks, as like we saw over here. Look at all the up days we got during that intermediate pullback. And lots of, we had multiple 2% rallies during that intermediate pullback. So that's kind of how we see things going here today. The short-term sentiment, especially on the Dow Jones, looking like, and again, remember, we are, this intermediate rally started in early November, so we are now going on 5 full months. We are almost there, because we'll be April 1st tomorrow. We're almost 5 full months of an intermediate run. That's when the typical run's 1 to 3 months, 5 months is very long in the tooth, right? So keep that in mind when we're talking about, how much longer, how much higher we can stay bullish. All right, before I show you some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon right here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us 2 things. Number 1, you liked a video, of course. And number 2, it's a way to tell us that you want us to do another video again tomorrow. It's a quick way to give us feedback that you like our videos. Of course, if you don't like our videos, you don't have to click on anything. But if you do, and you want to let us know really easily, just one click you can do right now even while you're watching. Also, comment down there. What did you get out of our videos today? What stood out to you? What questions or comments do you have? Post those in the comment section below. I know a lot of YouTube watchers go to the comment section to kind of see what people are talking about. So go down there and let people know what you got out of the video. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. You get access, among other things, you get access to our Market Outlook community forum on our website, so that way you can interact with other viewers and other market scholars about what we cover here in these videos. Follow me on Twitter for more content in between the videos from day to day. There's my handle there, at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, here on our video here, check out some of these other things over here on the right, including other posts, as well as our Market Outlook live video. This is, again, I've told you about these before. I do live videos every day. I do the Market Outlook at 3:30 Eastern Time. This is where you can access them. You can also get to them right here, the live trades reviews. We review all the trades that I post in these Market Outlook videos. So I just don't tell you trade ideas and then forget it, right? I actually tell you trade ideas and then we actually trade them and manage them. And we do that in this video, in this trade review video. So check that out there. All of our paid subscribers, both our premium and our monthly subscribers, get access to that video, as well as all of our trading rooms. And you can see all, as well as all the archives. So you can see all of our recorded trading rooms over here, as well as our upcoming trading rooms by clicking on that link. Our premium subscribers, of course, get access to a lot more than that, right? They get all of our class forums, as well as premium resources and things too. So keep that in mind. Come down here to the bottom, click on this heart, opens up a new tab. Hit that like button right there. Also come over here, hit that thumbs up icon, opens up another new tab, and hit the same thing. Hit that like button here as well. Again, the more you do that, it really helps us out because the more engagements our posts have, the more people will actually see it, right? The way Twitter and Facebook work is they promote to people who actually follow our accounts the content that has, high engagement. So that's why we always ask for it. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. All right, now let's take a look back at the weekly chart here. Oops, excuse me, let's go to the weekly chart. And you can see the nice, good bullish candle we're getting on the S&P now 3 days into the week. We only have one more day left with the holiday week, as well as on the Dow. Good bullish week there. Not such a bullish candle on the NASDAQ. Very, very small range. Look how small the range has gotten. Right, fitting right inside those 23%, 38% Fibonacci retracement levels. and then the bearish candle on the Russell. And we're still not done filling in that range. So we are still above the 50-day moving average, though we are flirting, as you can see here, we are flirting with breaking below that. We had briefly when we were breaking that 23% line. So that kind of shows you where we're at on the Russell, and why I think we're still not done with this little weakness that we're getting on the Russell, that this Hakinyashi trend will, should continue here. Let's take a look at the 3 green arrows, and you can see we do have 3 green arrows on the S&P 500. You can't really see it very well. I have to fit the studies here, and it makes it easier for you to see when I zoom in. There we go. There's our 3 green arrows. A little bit above average on the volume. We'll get to that here in just a second. But if you look at the 2-line version of this, you can kind of see what's going on. MACD and stochastics both back above their moving averages, back easily above the 8-day moving average. Again, that's what it looks like on the S&P. The NASDAQ, looks, we're getting this convergence, and we got a little breakout today. So are we going to get a divergence now to the upside? So we're either going to break down from here with the 3 red arrows that we got, right? So if you look at this chart, you can see the 3 green arrows. 3 green arrows with that light green shading and the yellow line. So that actually can be a very bearish pattern. We'll keep our eyes very closely attuned to that, because I expect it will actually come down from that. If you like to look at the IWM, you can see we did bounce above the 8, but we held the 17-day for some resistance here. MACD and stochastic still kind of at or below those moving averages that are falling. The stochastics moving average falling below 40. It didn't fall below 40 over here. It got to 40, but didn't quite fall below that. So a little bit more bearish of an orange line this time, because the same thing over here. It fell below 0. It didn't fall below 0 over here. So a little bit more bearish on those moving averages than we've seen, which again, why I see that this will be more than just a little drop like that one was. That will probably end up following suit with what the NASDAQ is showing us here. Let's take a look at the RSI and the CCI. So let's take a look at that here. And you can see we are, still not getting above 60. We're just flirting with 100. On the S&P, the NASDAQ, same thing. We're not above 60. We're still between 40 and 60 and between the 100 levels on the NASDAQ. The Russell is below 50 and below 40. So, we're not bullish at all in the least bit on any of these indicators. You look at the trend strength indicators, and we don't have a trend going on anywhere. The Dow still is maintaining its trend, but look at the Qs and look at IWM, and you see that there's just no trend. In fact, IWM is in the cloud, and Qs are flirting with, we're below the cloud, and today's move kind of is flirting with hitting it for resistance levels. So again, not the most bullish patterns in these other indexes, and today's move wasn't enough to break us out of these not so bullish patterns that we've seen. A much different story here on this chart too. You can see SPY and diamonds are really flirting with new 4-week highs, very, very close to 4-week highs, when we're about to get new 4-week lows here in just a couple of days, where we're going to move this all the way over here to that low point on 325. That's what those two indexes look like, and the Qs are actually pretty close, because we've really, once we get these days off, the range for the Qs is really tightening up. So that kind of gives us an idea, that convergence that we saw in the MACD indicator. But again, IWM, much different story. It came up to some resistance here. We've got common gaps this morning that we have to fill in, that we didn't fill in at all today. So I fully expect that today was just kind of a one-off period, that there's a good chance. Of course, anything can happen tomorrow, and we could very well rally to the upside again. But I think there's a good chance that we fill in that gap from this morning as early as tomorrow, and we continue to get some more bearishness, weakness in the short term. See, the low point's going to move over here to 325's low as well, but the high we're not anywhere close to on this level. We saw today's volume was just a little bit above average, 112, but the range was well below the average. So just under 2 3/4 points. When you take a look at it, where is it? Here. The volume was the ATR, way down here, 2.69 points. So very, very low trading range, even though the volume was still above average. So that's bearish volume, but with a much smaller range. Again, kind of shows you how much we buy today's bullishness. Again, last day of the quarter might have something to do with that too, but it doesn't seem from a technical perspective, regardless of what day of the week it is, or of the month or the quarter it is. From a technical level, it doesn't seem like it. Just seems like another one of today. Seems like another one of these days during pullback moves. And again, we haven't even started the pullback on the Nasdaq, but we have, or in the S&P, we have started it here, and we've seen moves like today recently. So it doesn't seem to be anything more than that. Let's take a quick look at the volatility index. The VIX is really low, back to this below 19 level. But what's fascinating is this is the third time we've hit this level, fourth time we've dropped below 20. So 1, 2, 3, 4. But each time we drop below 20, we've gone higher here on the relative chart. So down we hit the extreme lows there. Then we hit the next one up a little bit higher. Then we hit the next one up a little bit higher. And now this one, we're not even getting in below 85. So you can see we've been grinding higher, and that makes an intermediate move more, easier to do than it could over here. So over here, it's very hard for the VIX to go from extreme lows to intermediate high, intermediate pullback high, right? Because when you hit the 105% mark, that typically signifies the beginning of an intermediate run. Very, very hard to make that big of a move that quickly. But as you can see, it's easier to make it from these levels. And that's, as we've been staying down here, the VIX has been gradually moving higher and setting up a higher low point that can signal the beginning of an intermediate run. And remember that has already started on the Nasdaq, but hasn't started yet on the S&P 500. So to summarize the technical outlook before we look at some other charts here, obviously today was a good day, and it follows the trend that we're seeing on the S&P, on the Dow. But even today on those indexes that are still strongly bullish with rising long-term market sentiment, the short-term sentiment doesn't look good on either one of those. So it kind of shows us that today's we weren't as strong in those indexes as we were in the Nasdaq and the Russell, but those have been the stronger ones to different degrees. And up until the pullback started here, and for the Nasdaq at least, and recently very close to a pullback starting on the Russell, they had some good days today, but neither one of their bullish days were enough to re-engage new bullish intermediate runs. In fact, it seemed like more than just, it looked like more, it was just kind of a little bit of an up day in the midst of a pullback run, like we've seen plenty of before. And likely, maybe not going into the holiday weekend by tomorrow, but coming out of the holiday weekend next week, especially when I'm on vacation, which there seems to be a coincidence. The market's not doing so good while I'm gone on vacation. Probably coming out of the holiday weekend, that's when you'll probably start to see the Russell flirt more and even begin an intermediate pullback like the Nasdaq has, and then the S&P to follow suit there. I don't anticipate us falling off a cliff, and I hope you don't engage that. And it doesn't mean I'm going to be closing all my bullish trades, this week. It's just, it's just something to keep in mind that we had a very mature intermediate run that's getting more and more mature, and we're seeing more and more signs that mature run is getting closer to the end than we are further away from the end. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. Let me know what you're seeing that tells you why you're a lot more bullish, or if you're a lot more bearish than I am. Share with us what you're looking at down in the comment section below. All right, now let's take a look at how things finished today. And if you take a look at the asset class comparison, you can see gold was the biggest mover today. The dollar had a little bit of a drop. Now remember, the dollar, we'll see here in a second, the dollar had really rallied up to a significant resistance level for the dollar, support for the euro. And it appears to have bounced up here, as you can see here in a second. So gold really was the biggest beneficiary of the weakness in the dollar. But real estate and the bonds were very, very bearish. You can see developed market stocks also very relatively bearish as more talks of shutdowns in Europe there. It's kind of weighing on that. If you take a look at what else did well, you can see the IWM started the day strong. The Qs then kind of took the baton, and then IWM caught up to the point where by the end of the day, the Qs, they were kind of going back and forth. The Qs finished with a slightly higher gain, but both of them well up above the S&P 500, which was very, very weak there. Let's take a look at the dollar chart and the gold chart here. Let's take a look at over here. Take a look at the dollar first. Because remember, again, yesterday, this had dropped to an important support level, that long-term 23% level, and got a cluster again. The fourth cluster out of 5 trading sessions. It's a very, very significant selling. Still right around these other two, there's multiple Fibonacci levels in this area. A very, very long-term one here at the 23% line that we had broken up above, and now we're holding it for support. And then the market sentiment one that started off of this May low point, that's in orange. And then the current intermediate run, the 78% level of that is sitting here too. So lots of bearishness well below the 30-day moving average. And the market sentiment line's been declining here. So it looks like we are kind of figuring out where we might stall at this of this decline, this pullback. If you take a look at gold, it's kind of double bottoming here with a nice little bit of a morning star candlestick pattern. The short-term sentiment rallying up to the upper half of the chart. Still bearish, still dark pink shading in a red line, but a potential double bottom. So we'll kind of keep our eyes on gold and see how it's performing. Remember, gold, when you look at it from this perspective here, has gotten a death cross. But now still kind of flirting with this low, so not able to really continue the weakness to the downside. Here is the Euro US dollar, and you can see how, again, multiple Fibonacci lines as well as a 200-day moving average sitting at this level too. Bonds, on the other hand, if you take a look at long-term bonds, again, very extremely bearish here, well below the 200-day moving average. And then you look at its market forecast, and you can see it's kind of stalling here too. It had gotten significantly below the 30-day moving average, but now it's converging. In fact, when you look at it on this level here, the TLT, so there's your significant MACD down there. In fact, when you look at it on a PPO basis, which remember, it's like the MACD, but on a relative chart here. So let me just move this up. There we go. Finally got it up there. So there's our MACD. There's the PPO. And again, for some perspective, let's go back a couple of years. Kind of gives you an idea. I mean, that's about as bearish as we've been. But you can see the convergence now. Like we diverged to that lowest level that we've seen in the last couple of years, and now we're converging, and things aren't nearly as bearish. We're not bullish either. But I think we've talked before. I think that was the parabolic peak that we've seen, that we'll see on long-term bonds to the downside. I think that's going to be our peak, and I think we're going to now start to progressively get less and less bearish and more bullish, right? Things will gradually turn themselves around, and we're just not quite there yet, right? We're still just kind of stalling here and finishing. And what that looks like from a yield perspective is, we're at this 1.75% level. We're actually back to that parabolic high point. If you look at it again on the DMI here for TNX, we're back at that parabolic high. Potentially with a divergence forming, because we're getting much lower highs on the positive index and much higher lows on the negative index. So I would look at that very much like a divergence, head and shoulders type high point here, not a continuation of like multiple more months of an intermediate run at all here. All right, so from a sector rotation standpoint, you can see that we have the relative rotation. This is the daily chart for the relative rotation. I think I did update it earlier, but there's your top, there's all your safe haven areas. They're the only ones in the green. Financials, materials, industrials are all moving to the left. The communication services, energy into the red. Our other technology, discretionary, kind of losing momentum and still stuck in the blue, not able to move over. So I mean, this is a risk-off rotation. If you look at the chart over here, here, let me do this and fit all that in. If you look at the chart over here, you can see that's all being done while we're bullish, right? While we're bullish to the upside. So you can see, but if you look at it from a weekly perspective, then you can say, okay, well, this is the last quarter, and we'll fit all that in. we're just getting started. The financial energies have very strong relative strengths. They're just getting started and rolling over. And then your safe haven areas are still way over here. They're just getting started and rolling up. So the daily trend kind of shows that we're just kind of we're just grinding our way through to this new posture. If you take a look at like the same chart over here on the sector comparison, and let's go back just 2 weeks, that same 10 days that you saw on that chart where we were rotating into the favor. So we'll just go back 3 weeks or that same 2 weeks here, and we'll just go 10 minutes. There's your utilities and staples and healthcare and real estate all up here. Industrial still maintaining some strength, but everything else down. Like the S&P is flat over 2 weeks. XLE is down. Financials are holding up okay, but all lagging. XLC, XLY, XLK all lagging behind that S&P, and you can see materials also falling down to where, and our strength is in the safe haven area. So we are gradually moving, and just to give you a reminder, this intermediate run what came off of the Halloween low point here of last year. This is how long this intermediate run's been going. That was the low point. But to show you, like, those are our big winners since that intermediate run started. Those are the big winners. 70% run on energy after the pullback. Financials still close to 40% gains. But you can see our big laggards and why they're going to start to outperform as we rotate into these underperformers and rotate out of these extreme outperformers. It's just kind of a natural rotation as we exhale before we start a new run back to the upside. I mean, if you take a look at, from when we peaked on 9/2 to that same October 31st low point here. So this is from the end of the one intermediate run to the end of the pullback to the beginning of the next intermediate run. Then you can see, again, everything was down and the XLU was up, but that's what an exhale looks like, right? And real estate did okay for a while there too, and but that's what exhales. We get a drop, we pull back on some of these areas that did so well, and then we'll start a new intermediate run and a new market sentiment run for that matter. Ultimately, when the exhale is over with. You also see that rotation in this chart that I've been sharing with you too. This 12 grid, again, you look at the top, and I mean, we're falling down, light green shading in the yellow line, and yellow line there on discretionary, and these areas look really good, but they're not maintaining the higher run anymore. They had some parabolic moves that appear to be now consolidating, especially with some divergences on industrials and materials, whereas our strength lies in these safe haven areas. So you can see visually on this chart as well that rotation taking place. Now, one stock in particular that had some good news today that did pretty well is Microsoft. Now, Microsoft had a really good trend going, but then it's been stalling, and it's been about as neutral as you can be. Very, very flat. Near-term line not really peaking or dropping to extreme lows. The intermediate line about as flat as it can be. You look at some of these other indicators like RSI and CCI, you are stuck right in the middle of these sideways ranges. You look at the DMI, and there is there's just no move. They're both down around the 20 level. Neither one of them is above 25. The ADX is all the way down below 15. No move, no trend whatsoever. The Bollinger Bandwidth has gotten really low compared to what we've seen. We're centering around this volume node at the top end of the value area. You can see here we're stuck in these middle quartiles on the Bollinger Bandwidth. You look at the Ichimoku cloud strength, and we've just got a very, very noisy period. That's on the daily chart. You look at the weekly chart, and we've had a very strong run, and we're just consolidating that now. It appears that we're consolidating that now. You look at the long-term crossover chart, and we've been very strongly bullish. And again, the PPO is falling. It's still at very high levels, and so it's still got more room to consolidate into this kind of sideways action. If you look at the three green arrow, I mean, look at that convergence. All the moving averages basically are all sitting right on top of each other right now. The MACD is as flat as it can be. The stochastics is right at the midpoint. Very sideways action. Even with today's nice little rally, and we're off of the highs of today. So when we look at what we can trade, then we say, okay, well, let's sell a put vertical at the 20 delta, so selling the 220, buying the 215 for protection. Sell a call vertical at the 20 delta, selling the 255, buying the 260 call for protection. It sets us up for an iron condor trade. With earnings coming out before May expiration, we can only do two of these and get a typical reward for far less risk than normal. Like normally, I'm risking about $1,000 to get $300 or a little over $300. But in this trade, I'm risking less than $700 to get $300 because of the higher risk associated with that earnings announcement. I'm able to do that. If you notice, those break-even levels are right here, so I've got room to the upside to work with. Though we don't, we've already had a bullish move. It doesn't look like we're breaking out. On the downside, I got to break even right where the big volume node support level is. Even if we do drop, it's going to drop to some pretty strong support. So we've got a nice little setup here to be able to try to make a few $100 on less than normal risk because of the premium that we're getting heading into the earnings before May expiration. All right, so that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to a Market Outlook forum. Remember, even our free subscribers have access to that. Open up any new thread with any new questions or comments you have. Reply to other people's threads, and let's keep this conversation going in between videos. As always, thank you very much for watching our videos today. Remember to hit that thumbs up icon. Like us on Twitter and Facebook as well. Subscribe to our YouTube channel and comment on the video tonight. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.